Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of GameStop, ticker symbol GME. And here we are looking at the chart on the daily time frame after the market has closed on Friday, June 7th. Currently trading in the after hours, but did close the day at a price of $28.22, being down nearly 40% on the day and continuing down just to below $28 a share in the after hours, but might end up a little bit lower or a little bit higher. We'll have to see. But there are a couple things I did want to go over with the chart, but mainly I just kind of wanted to go over some math with you guys because I do think there has been a lot of questions, speculation, whether he will be exercising his call position or if he will be selling it, if he was going to sell all of his shares during the live stream, kind of stuff like that. And I think one thing that we have working against us is time. The more time that we have, the more we think about these things that could, really set us back. And what I think is going on is a lot of great stuff. And so, I wanted to go over that, but I also wanted to go over some things to be keeping in mind. I do think we will get some dip buying opportunities in the week or weeks ahead, but I do think 2 weeks from now, with the close on the 21st, I do think we are going to see a lot of volatility to the upside. And so I think things are looking really good. And so one thing that does stand out to me, and actually, it stood out to Roaring Kitty, he pointed it out to all of us during his stream today, is that we effectively saw, a double bottom here going back to the lows of February in 2021. We did bounce from that. We broke above these downtrends that I have drawn here. So, the stock price is looking pretty good. But there's one thing, that's maybe not so great for today's close is that if we do look over at the max pain for today, June 7th, it was $30 a share and we did close below that. So, that is not so great, but we could have closed a lot lower than that. And I think the big thing that we really need to be thinking about is the max pain for June 21st. If we look at that, that is at $20 a share. And even though we closed below max pain today, we closed pretty comfortably above $20 a share. And also the company has positioned itself, raising some funds, securing lots of money to just be expanding. So I think it's really good for the company. And also they did report their earnings early, and which, were not that great. And so we got some bad news out of the way. And so any pullbacks that we do see over the next week, like the pullback that we're seeing right now below $30 a share, I think that's discounted shares. The dips are gifts. So think about it like that. But, having just mentioned the max pain for June 21st and $20 being that strike price, I wanted to go over something that Roaring Kitty has posted, which is his position. And, because there's been a lot of talk about, is he going to exercise his calls? Is he just going to dump them and capitalize on the premium? Is he going to walk away with that? And so I think that he's given us a lot of really good information here. And I've actually gone through the numbers in a spreadsheet. I'm going to walk you through them. That kind of breaks down whether or not he could exercise his calls and, what he's going to have to do about that. And so just breaking down the position, if you're not too familiar with options, basically, what he has here, what he shared with us is that he has a position in GameStop shares. He has 5 million shares at an average price of $21.27.4. As far as his call position goes, that is with a strike of $20 a share. So if by the expiration date, the price closes above $20 a share, that option call is worth a lot of money, and he can then exercise it. He could exercise it now, given that price is above $20 a share, and get, all these shares for $20 each. And the expiration date for his options call is June 21st. He could also roll that into July. It's also a possibility. But, the number of calls that he has, 120,000. And interestingly, he also did post the amount of cash that he has on the sidelines. So I think we've got a lot to work here, and I have gone over it in an Excel spreadsheet, which I did do, going over in the live stream earlier today. I did kind of a pre-game kitty stream. And so these are the numbers that I've crunched. And I just want to walk you through them because I think it's, pretty encouraging. And I think that there is quite the possibility that he will be exercising some, if not all of the calls that he has. And I think that we will be seeing a lot of volatility to the upside. But anyways, I'm just going to break down my thought process here for you guys, and hopefully this is helpful. Hopefully you like how I've presented this as well. And so here what we have in this column B, we can see the quantity, the number of shares that he has, 5 million, and the number of call options with the $20 strike, that is, 120,000. Just went over that. Here I have the multiplier, and so for shares, the multiplier is 1. He has 1 times 5 million shares. And the multiplier for call options, though, for every options contract that he has, that represents 100 shares. So the multiplier here is 100. And so from that, we get 100 times 120,000. That is 12 million. So that's quite a lot of shares right there. And so, I just wanted to go over this because it's quite possible I screwed up on some math in a minute. Just saying the word 12 million, I might have screwed something up. But anyways, I will continue on with the value. And so here the value is the quantity of shares or positions times the price. So whatever that price is, whatever price he decides to sell those at, who knows? Not up to me, not up to you. Whatever he wants to do, it's fine. And then for the call options, the difference between that and the shares is that it's the quantity times the premium and then the multiplier, which is 100 shares. And so also considering the cash that he has, I wanted to look at that to see if he could exercise these call options. And so looking over here at this column, the cost to exercise, we can just look at the cell there. And I believe you can see up here how I got that number. So that is 20, which is the strike price, times the quantity, times the multiplier. And so that represents $240 million. And so does he have $240 million to exercise them? No, unfortunately, he doesn't. And actually, the cash that is needed to exercise them is about, $210 million, more than that. And so that's what I have marked in yellow here. So, he can't exercise all of these calls that he has. But there's one thing that he does have that's on the table. He's got a bunch of shares. And so his average price for these is around $21. The strike price for his calls is $20. So if he were to, hypothetically sell these shares to then take that capital and exercise his calls, he could potentially, depending on the price of GameStop, he could potentially exercise these 120,000 call options. And the multiplier for that is, 100. So that represents 12 million shares. And so I'm just going to slide this over a little bit. And so we can see over here, the price to fund the exercise is $42.12 per share. And so if we look at that, that is based on F5, which is the cash that is needed, and then B3. Let's scroll over to B3. That is, the number of shares that he has, 5 million. And so if we take this number, the cash that is needed to exercise, and divide it by the number of shares that he has, that's the average share price that he needs to sell at in order to have enough capital to buy those 100 shares. And this is the one thing that I think I screwed up on, is the shares after a full exercise. And so he would then be, selling 5 million shares to then, in exchange, exercise these call options, and would then get 12 million in total. And so that's actually not a difference of This is the difference. And so that would be he'd have the 5 million, he'd have to sell those, but then he'd get 12 million back. And so he'd sell 5, and then this is the additional shares that he would have after carrying out that execution at a price of $42.12 per share. So not only would he have the 5 million that he currently has, although he'd swap them out for exercising calls, he'd then have an additional shares after full exercise. He would have 7 million shares there in addition to his initial 5 million. So he could definitely, considering the cash that he has, considering the number of shares that he has, he could use those to then carry out this exercise and then have 12 million shares. So this could be set up to be very, very bullish. We've already seen price going to $42.12. If it gets to double that, he could do a full exercise while holding a lot of these shares. And so price could be going up a lot higher in the coming weeks, whether that's leading up to the 21st or following it. I actually think this will go into July. He could also roll some of those calls into July to keep the option on the table to exercise them. But here I just wanted to go over some levels that if we do pull back to them, I think it's good to not panic. I think it's good to not have that anxiety build up into that chest. You know, it happens to all of us, but I think that we should remember when that happens, that is our bodies telling us to run, flight, or fight. We are here in a fight. And so when we see price come down, that is an opportunity. The dips are gifts. So think about it like that. And so what we saw here on the day today, we did go up to $48 a share was the high, corresponding with this green line here at $47.99. We did pull back a lot, though, closing below 30, so that sucks that we closed below max pain. But we didn't dip to $24 a share. However, if we do, that is a gift. That is an opportunity. From this run up here, and I should note that I actually have this on the weekly time frame. Oops. Now looking at this on the daily time frame, we did get that wick up to $48 a share, like I had just said. And so, we do have $30 right here. 24, like I just said, that might actually act as support because we got this consolidation below that level. So we could be respecting $24 a share, but we may never see 24 again. Who knows? But if we do dip to that level and respect it, maybe we get some wicks down to the 786 from this retracement here. This is on the log scale on the y-axis. I'm actually surprised that the 786 is right in the middle there, but that's because it is on the log scale. And if I do, let's see, just for curiosity's sake, if I do adjust that to linear, there's no difference there. That is still right around that level at that exact same price, which is $21.69. So let's have fun with our prices. $21.69 sounds like a good dip buying level. If we get a wick down there, that could be a great opportunity. I don't think it's going down to $20 a share, but if it does, I think that 18 will definitely serve as support, but it has already served as support, so I doubt that we're going down there. I think the lowest that we'll see it is right around $21.69, maybe $21.50, but maybe orders don't get filled there. And if that happens, that is a gift, and I do see that price will be going much higher in the weeks to come. And I am going to switch this over to the weekly now so we can look at this bigger picture. I think that $120 a share, I think we're going to blow past that. I think we could get up to 200. I have no idea though, but I just think the chart is set up in a very nice way with the number of calls that will likely be expiring in the money on the 21st. Some of those, I think a lot of them will be exercised, and I think we will be going to the moon. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.